Hello, welcome to AleaSoft webinar. My name is Alejandro Delgado, Associate Partner of AleaSoft, and thank you for joining us today to the webinar with the topic Prospects for Energy Markets in Europe, New AleaSoft Divisions, Cannibalisation and PPA. Our speaker today will be Oriol Saltó, Associate Partner of AleaSoft, that will discuss about the evolution and prospects of European energy markets. He will comment on the new divisions that AleaSoft created to boost renewable energy and energy transition, several hot topics like cannibalization, low prices, price factor, prospect for photovoltaic energy, batteries, and hybridization. And we talk about PPA from the point of view of large and electro-intensive consumers. If you have any questions at any time during the webinar, please use the Q&A menu and we will answer them after the presentation. And now, I hope you enjoyed the webinar.
Thank you, Alejandro. Good morning, good morning, everybody. So we are already into the summer. Very hot temperatures here in the southern part of the continent. So as Alejandro mentioned, we are going to talk a little bit about the usual review of the energy markets during the last weeks. We will be comparing with what we saw in our last webinar. It was 4 weeks ago, if I think. And then we will talk a little bit about some hot topics on the energy sector, relating them with the services that we provide in AleaSoft. We will show you how we split all our services within 6 divisions in order to make them clearer, because as we have 25 years of history in the company, we started introducing a lot of new services based on the needs of our clients. And at some point, we were seeing that it was difficult to just make it easy for everybody to understand what are the whole range of services that we provide. But let's start from the beginning. As always, I will start with a brief introduction of AleaSoft and the services that we provide. In AleaSoft, we offer forecasting reports and analysis reports for the energy sector. We cover all the energy markets in Europe and also some markets in North America and South America. And we also have data, and we are able to provide analysis on a lot of other markets at the global level. Our goal is finally to expand at the global level and cover all the energy markets in all the world. The methodology that we used for forecasting and modelizing energy markets is our own methodology. It's a methodology that we developed ourselves specifically for forecasting and modelizing on the energy sector. The 3 main points that we always like to stress about this methodology is that it is a completely scientifically based methodology. It's based in a hybrid model that combines artificial intelligence, neural networks, machine learning algorithms with more methodologies from, let's say, the more classical statistics like regression, econometrics, etc. And it makes a very robust forecasting model that produces very stable, accurate forecast. A stability of our forecast over time, it's something that our clients appreciate, especially. And it's one of the main reasons why we have clients that have been with our company since the beginning. We started 25 years ago, and this is the methodology that we have been using all this time. So starting in the Iberian electricity markets, now covering all the energy markets in Europe and some markets also around the world. As I mentioned, we divided all the services that we provide within 6 divisions. We'll talk a little bit more afterwards, just to mention that with this range of services, we provide solutions for basically any player in the energy markets, being it producers, consumers, operators, traders, investors. So any player in the energy markets at the global level at some point or the other will need forecasting, will need modelizing or analysis on energy markets. We'll talk a little bit more afterwards about all of these services that we provide. So let's start the review of the energy markets during the last weeks. We always start with the oil market. These are the Brent oil prices. And we saw in our last webinar that just after the OPEC Plus meeting, they met and they decided to extend their cuts during the summer, during the third quarter, and start increasing the production back by the end of the year and in 2025. So basically, the market reacted with a deep decrease in the prices, and prices then started increasing. And now what we are seeing in the last weeks is prices getting above $85 per barrel. They are still not going close to the $90. Now they are a little bit back during these last days. Right now they are around 85 today also. So basically, why the price has been increasing? There are here several factors that can be combined. On the one hand, as we already mentioned, during the summer is the peak of the demand during the year. So basically, as the production from OPEC Plus countries, it's not going to increase during the summer. We can see a little bit tighter situation during the summer. So with just enough supply to meet the demand. So this tighter situation could be one of the causes of these increasing prices. Also, the geopolitical tensions in the Middle East and the situation in the Red Sea, it's also degrading during these last weeks. So this also puts pressure into the prices. And then we have the hurricane season in the United States. It's expected to be one of the worst seasons ever. Hurricanes started quite early, and this can impact on the production and exports of oil from the USA. So this is also going to put an extra pressure in the prices. And how the demand is increasing can be seen, for instance, in the oil stocks in the United States. This is the weekly change, and we can see how in the last week of June they decreased significantly with more than 10 million barrels, something that it's quite far from the usual rate of change of the weekly change of these stocks. So something that is pointing to strong demand going into the summer, while the supply can be a little bit tighter. Situation from the gas is slightly different. We have been seeing during the last month how prices have been increasing. And in our last webinar, they were around $35 megawatt hour. Right now, they are back to 30, closer to what we said that could be these new equilibrium prices around 25. So prices are going back basically because we are already into the summer. The demand is decreasing. It's usually during the winter. During the summer, it's when the demand is lower. The gas demand is lower. So basically, as we already have quite full gas reserves into the winter, basically we are seeing no supply problems during the summer. So this is relaxing the prices. We will see afterwards when we look at the forward curve how the situation beyond the next winter, it's a little bit more with prices increasing on after the winter of 2025, because there the situation of the supply is a little bit more uncertain. But for the present, basically already into the summer with with not much stress into the prices. If we look back on how the gas demand was during the first half of 2024, we can basically see that there was a decrease of 3%. The gas demand has been decreasing since 2022, so that's another half a year with decreasing demand. But the three main reasons or the three main sectors where how the gas demand is divided: residential and commercial, the gas for power production and gas for the industry. We see that the gas demand from the industry, that was one of the main components of the gas demand decrease during the gas prices crisis in 2022, is already recovering, and we have been seeing this for several months already. And in the whole first half of 2024, gas demand from the industry has increased by 10%. So industry, at least from the point of view of gas demand, is quickly recovering after the crisis. On the other hand, we have that mild weather, mild temperatures during the last winter, and also spring has been quite good on the weather sides. Basically, less gas consumption for heating on the residential and commercial sectors. And then the large component was the reduction of gas used for electricity production, basically because we have had a very good season of hydro production, mainly in Spain, also in Italy, and also in other countries in Europe. That's one of the main reasons why prices have been so low during the spring. We will see afterwards the specific case for Spain, where we have had very, very low prices during the spring. So basically, also a lot of wind production, solar capacity is increasing. So year after year, we are having more solar production. Also, nuclear availability in France mainly has increased the nuclear production. So basically, less need to produce electricity using gas. So 20% decrease in the gas demand for power production. So this is basically the main component contributing to this reduction on the gas demand by 3% during the first half of the year. Looking on the state of the gas storage, we are basically nearly 80%. We are 79.6, I think, something like that. Slightly below of where we were last year by this date, but basically increasing at the expected rate. We will be full probably before starting the heating season, when we will start decreasing the gas level storage. So this is one of the contributors to having stable prices now, slightly decreasing, going back to these new equilibrium prices. We probably will see prices lower to 25 euros megawatt hour in the next weeks, in the next month. Let's see. The situation of the CO2 allowances prices. Basically, we have been seeing during the last webinars how prices were increasing. We were having a steady upward trend. It was the largest trend in more than a year, after a situation of decreasing prices during 2023. During the first part of 2024, prices have been increasing. Right now, we are, let's say, we are already out of this upward channel, but prices do not show a clear downward trend. So they are sitting right now just below 70 euros per ton. As I said, no clear sign of starting a new downward trend. So probably the most expected scenario from different analyses that I've seen is that prices can remain for some time at this level, and at some point they will resume their upward trend. That is the long-term trend that we expect for this market. Okay, now let's see now how the electricity markets have been performing. And as always, I will use the I will use here. I will use this opportunity to show you one of the services that we offer. We have an online database with information about the energy markets in all around the world. Now, most of the markets that we have are from Europe, but we are incorporating new markets every day and new variables. So basically, here you can find all the information needed at any time from any player in the energy sector. So being you an analyst, a trader, a journalist, a CEO, a CFO. So whenever you need some information, you will have it updated. Always all the information in the same place with the same format, ready to be downloaded, ready to be analyzed, always updated. So very convenient, because information is power, and it's especially important in the energy sector. So here what we can see are the monthly average prices for some of the most important electricity markets in Europe. This is since the beginning of 2022, and the last whole month that we have is the month of May, and basically, one second, okay. Let me go back. So during May, the market prices were in most of the markets were slightly increasing. The only market where prices decreased was UK, where the prices decreased just by 0.5%. But on the rest of the markets, the prices increases. Belgium, Italy, they increased around 10%. Then we have France and Germany. They went up by 28%, nearly 30%. And then we have Spain, where it's the market, Spain and Portugal, both of them, where prices increased by 85% compared to the average prices in May. Sorry, I said May. No, it was June. June is the last month of that. Compared with May, prices increased in most of the markets. France is the market in red is the market with the lowest prices right now. It became the market with the lowest prices already in May, when they replaced Spain and Portugal, and now they kept being the market with the lowest prices. So if we make a zoom in the last weeks, this is since the beginning of May. Italy.
Uriel, we lost you there for a second.
Okay.
Since the start of this graph.
Okay, so this I was saying that these are the daily average prices for this market since the beginning of May. It's a zoom of the last weeks, and basically we see prices prices around 100 euros megawatt hour. The highest prices are always from Italy. They are clearly in the range or at the level of 100 euros megawatt hour. And we see something quite special here on the 26th of June. There was an event where all the electricity markets that are usually coupled in Europe, they're decoupled for technical problems this day. So basically there was no possibility to schedule exchanges of energy among these countries, and basically each country take its own price. And you can see that the worst part was for Germany. The prices went up to around nearly 500 euros megawatt hour on average. And on the other hand, we had France, where basically prices went down to euros megawatt hour. So clearly, this is just a clear image on how markets take advantage, let's say, of the international exchanges, so they can efficiently move the energy where it is most needed. So when you don't have this opportunity, you can have situations like this one. And if we make now we look at the hourly prices, so we can obviously see how in Germany that day prices were above 2,000 euros megawatt hours. So if we remove Germany, just to have a clear picture of the rest of the market, basically we see, as we saw, prices within hourly prices within 50, 150 euros megawatt hour. Some negative prices also, but it's just on some hours, not let's say a recurrent situation. If you look at the situation in the Spanish market, that was something that we have been monitoring during the last webinars, because the situation was a little bit alarming, a little bit worrying for the producers, because since the last week of February, we started having zero prices or even negative prices for the first time in the Spanish market for a lot of consecutive hours. So this and also the average prices that you can see here in red were quite low. So we were having very low prices during February, the beginning of March, then between March and April mainly. During May, situation improved a little bit, but we were still having very low prices during the central hours of the day. It means that the capture prices for the for the PV were quite low. Then in the beginning of June, the situation was still worrying, and then we started recovering. As we already mentioned when we were in the middle of this situation, this was a situation particularly typical from spring. Spring is the time of the year where we have lowest prices in Spain, because it's the season where the demand is lower, or we have less extreme temperatures. So where the demand is lower, we'll usually, depending on the year, we usually have a lot of hydro production. Wind production also in spring is important, and solar production is starting to increase going into the summer. So basically, it was a typical situation during the spring. In this spring also we had a lot of hydro production, so this was clearly a good combination to have this situation. But as we mentioned, as we were starting to see increasing demand as we go into the summer, the situation would improve, and that's what we saw. Right now, the situation it's much better. We are having prices around between 50 and 100 euros megawatt hour. Still, some days with very low prices during solar hours, but we even have days where the solar prices are above 70 euros megawatt hour. So the situation is much better. Since the prices started recovering, solar capture prices went from 13 euros megawatt hour that they were during the spring. Right now they are above 30, close to 35. So much improved situation. This is basically, as I mentioned, due to the increasing demand. We have here the demand for Spain in blue, increasing as we are going into the summer with higher temperatures. Also, wind production in red, it's right now much lower than what we had in winter and spring. Also, another important factor, hydro production, it's in green. It's highly reduced during the summer. And while solar production, PV production in this case, that it's in yellow-orange, it's increasing as we are heading into the summer. And as I mentioned, the increasing temperatures, we have the temperatures here in red, the demand in blue. So during the winter, we have lower temperatures and high demand. And now, as we go into the summer, higher temperatures with higher demand. So temperatures are increasing. It's expected to be quite a hot summer. So probably demand will keep increasing. And also the prices will probably also kept increasing. Okay, now let's take a look at the forward curve, the forward markets right now. This is the forward curve for the Brent oil. We are comparing the curve with the curve that we saw in our last webinar. Basically, as spot prices have been increasing, also the forward curve increased. Futures increased mainly in the short terms, 3.4% for the remaining of 2024. And then rapidly converging to the average equilibrium prices at the long term, around $70 per barrel that we usually have for the Brent oil. The situation for the gas here, we have different behaviors depending on the maturity, depending on the horizon that we are looking. If we look in the remaining of 2024 and the next winter for 2025, we see decreasing prices compared to what we saw in our last webinar. Basically, as the spot prices are decreasing, as we are going into the summer with less demand, enough reserve. Basically, the situation for the summer and also for the winter, that is this peak right here, it's improving, or that's what the market sees. 6.3% decrease on what is remaining of 2024, a slightly decrease for the whole 2025. Most of the decrease comes from the winter. So basically, the situation for the winter, it's improving. There where we said in previous webinars that as the gas that the remaining gas that is coming from Russia through Ukraine will probably stop flowing at some point before 2025. So that was putting some pressure in the prices as the supply may be lower than expected in the middle of the winter. The gas coming from Ukraine, it's around 5% of the whole gas supply to Europe. It's not a lot, but still it's significant. So that lately has been pushing the prices up for the winter. But right now we see that the prices are slightly decreasing. So probably the market is already counting on less supply from Russia, or somehow the situation is seen as not as worse as before. And then after 2025, we are seeing an increase in the in prices. Basically, as the situation of the supply, if the demand kept increasing, if basically the supply it's going to increase, but we have seen in and it was on the last webinar, maybe the previous from the last, we saw how until 2030, from 2030 on, probably the supply is the market will be oversupplied with no problems from the supply side, because we will have new countries starting to enter in the LNG supply map, mainly Qatar. So we and the markets don't see problems from supply side from 2030 on. But until then, as the demand recovers, as the demand increase, in Europe, as we are recovering from the energy crisis, also in Asia, as the demand is increasing also there are some uncertainties, and that's why prices kept fluctuating around 2026, 2027, but mainly they fluctuate upwards. So here is basically where the uncertainty is focused right now. For the CO2, basically, as the spot prices have decreased a little bit, the forward curve that it's always very rigid, decrease on the whole horizon by around 3%. the futures for the electricity, futures for electricity in 4 of the main countries. Basically, no changes in Spain, basically no changes in Italy, but we are seeing important changes in France and Germany. 5% in France, 4% in Germany in the whole curve. That's those are important changes because we are talking about just 4 weeks, 4 weeks of difference. So a change of 4% up to 10 years in just 4 weeks it's quite a large change. That we always include this reminder. Those are very liquid markets. They are not very robust, or they are not robust enough to take them as a, or to use them as a price forecast. If you need a price forecast, better use a price forecast that modelizes and takes into account all the all the expected scenarios into the future, and not those illiquid markets that are very volatile, as we have just seen. Okay, and just as a summary of this first part, what are the key elements that we are taking into account now when forecasting energy prices? We have seen how oil prices are rising or have risen during the last weeks, basically with more demand as we go into the summers, and some fears on the supply side. Some of them for geopolitical reasons, the situation in the Middle East, situation on the Red Sea, and also from weather conditions, as the hurricane season in the United States, in the Caribbean, it's already starting earlier than previous years, and it's expected to be, if not the worst, one of the worst seasons in the history. Gas prices, they inverted the upward trend that we have seen during the last month. So now they are going back closer to the 30 euros megawatt hour. Probably can go down to the around 25 euros megawatt hour. Basically, during the summer, the demand is decreasing. Stock levels are filling as expected. So basically, the prices see no risk during the summer. Also, winter of the next winter is seeing no clear risks, as futures prices have also decreased for the first part of 2025. Beyond that, 2026, 2027, there we are seeing some uncertainty, as futures prices have been going up. CO2 prices, now they stopped the upward trend. They are just below 70 euros per ton, but still no clear sign that they are going to keep decreasing. Basically, we expect them to stay around that level, or at some point to resume their upward trend. And for electricity market, we have seen how prices are starting to increase going into the summer, with more demand, with less hydro, less wind, and more solar. And still, France is the market with the lowest prices. And in the long term, as always, we see some stability. Prices will be driven on the production of renewable energy, production of green hydrogen. The energy storage will play a key point in prices at the long term, and how all these renewable energies with hybridisation, production of green hydrogen, how all of this is going to hybridize, and how it's going to modelize the prices at the long term. Okay, so this is this concludes the first part, and now we are going to talk some of the topics that Alejandro mentioned. Cannibalisation. Well, we have already mentioned cannibalisation. We'll talk about PPAs and interconnections, and some other topics. And we will be also explaining how we have divided all the services that we provide, because as I mentioned, we started with demand forecasting 25 years ago, demand forecasting for the Spanish market. Then we include price forecasting. Then we expanded to all the rest of the European markets. Now we are covering markets all around the world. And we have been incorporating a lot of services. So we have divided them in order to make them easier to understand, easier to explain. And as you will see, we like a lot colors a lot. So we have Alea green, Alea blue, Alea white. Basically, we have divided them on forecasting services, on information services, on analysis services. And a fast introduction, Alea green, here we are talking about long-term forecasting, long-term analysis. We are talking about 30 years ahead. Alea blue, in this case, we are talking about short to mid-term. So we are talking basically the day ahead, hours ahead, minutes ahead, up to 2-3 years ahead. And we will see how we can use those information, those forecasts. Alea hub, it's a marketplace for where you can when you can find counterparts for a PPA, or you can find projects that are available to buy, or when you can offer your projects. Alea storage, all the analysis about energy storage, being it batteries, being it green hydrogen for seasonal storage, and the hybridization of these technologies, these storage technologies, with renewable energy production mainly. Alea white, here we are talking about information. That's we have the online database that you have already seen, but we also have webinars, news available, training information available. And then we have Alea consulting. It's a little bit more generic, but it's basically trying to help you in any decision that you need to make. If you need any strategic decision that you have to take, if we can help providing data, providing analysis, providing forecasting on how we can help you making that decision. So, obviously we have a logo and a color for each of our sections. So let's talk about basically everything goes around how we buy or sell energy. If we are producers, or if we are consumers, or if we are a retail company buying energy for our clients. So basically, the standard, the most basic strategy that we always recommend, everybody recommends, is diversification. So trying to buy all your energy in the daily market, it's kind of dangerous. So if you want to live dangerously, you can try that. But we have seen how prices fluctuate and what's the volatility on the daily market. So it's something that it's not something that it's safe enough for running a business. So the ideal situation if that you take different fraction of your energy and you try to put it in different horizons. So being it selling energy or buying energy, it both works from both sides. So ideally, you can put some of your energy at the long term. This means signing a long-term PPA or a shorter bilateral contract, or even going to some to the futures market with yearly products or quarterly products. Now we are moving to the midterm, monthly, weekly, and more in the short term. You can also trade in the futures market, and then you have the merchant option that is obviously. So it's a good idea to keep some of the energy to put it in the daily market, because there you can also find a good opportunity, being it selling the energy at higher prices or for buying the energy at lower prices. So we will start from the shorter term, and we will go to the longer term, and we will end up talking about the PPAs. So basically, for the short term, we are talking about the daily operations of your power plant or the daily operations of your, if you are a large consumer or if you are a retail company, the daily operations of your company. So for that, basically means that you need, if you are producing, the production, the forecasting of your plant production, the prices for the daily markets, for the intraday markets, in order to put your bids, to submit your bids to that market, and also taking into the consideration, let's see, if you are able of, if it's a good, if you have a good opportunity on participating, on the ancillary services. If you have energy storage available, how will you manage that in order to take the maximum profit from having the opportunity to store some of the energy and maybe delaying the injection into the grid, finding, for instance, a better opportunity in the daily market, or keeping some energy to participate in the ancillary services. Production, so everything from the production of your power plant to the prices in the energy markets. Renewable energy production has an important an important role on that. So basically forecasting solar PV, concentrated solar power, wind power, hydropower, that it's key for understanding how the market or how the whole energy system is going to perform in the day ahead, or the following hour, or in a week. Also, if you are a retail company, you also need to have a forecast on how much energy your clients are going to need in order to purchase the most, to purchase the appropriate amount on the market, so you do not deviate too much from the final consuming from your clients. That's on the, let's say, the daily operations. If we go a little bit more into the midterm, there we need to think 1 year, 2 years, 3 years ahead. So we need to have some clear vision on how the market is going to be, what is the situation right now in the futures market, and how we can play, what opportunities we can take to keep hedging some energy in the futures market in order to have our position covered, in order to mitigate enough the risk or market price volatility. Basically, here we can provide forecasting for hourly prices up to 3 years ahead, price stochasticity, so trying to assess what's the probability of the prices going above or below a certain limit. This is ideal for risk management, so putting into your risk management model not only a price but also a probability that it's very convenient, because depending on your risk appetite, you can take more aggressive or less aggressive hedging situations depending on the expected probability of a given price outcoming in the spot market into the futures. Also, we forecast futures, the prices of the futures markets. That's a little bit more tricky because you have to anticipate some of the changes, but basically we can provide the expected trend into the future. So basically, if we see that the futures markets right now, they are above the equilibrium price for that market, then we can expect that this price will start decreasing, or this price will start increasing if it's lower than what we expect. So we can provide some trend on futures prices that can be convenient to find when is the appropriate time to buy a future, for instance. So basically, all these short and mid-term forecasting services are within our Alea Blue division, where we provide real-time forecasting or day-ahead forecasting, weeks ahead, up to 3 years, ideal for the daily operations or for the hedging strategies into the midterm. Now, if we move from the midterm to the long term, then there we have to start talking about PPAs. PPAs has to be have to be understood as what they are. And PPAs are basically a risk management tool. This means that the PPAs are used, or the idea is to use a PPA to mitigate the price volatility risk. So if you go to the wholesale market, basically you are completely exposed to the volatility of the market prices. Here you see in blue the hourly market prices for the Spanish electricity market. Basically, you can see how dangerous is living basically exposed to these prices that can go from 700 euros megawatt hour and in just less than a month having a price of exactly 0 euros megawatt hour. So this is kind of difficult to expose your company, to expose your income to this price fluctuation. So basically, take a PPA agree in a price, and then being in the fixed price or some kind of price structure that basically reduces a lot this volatility. Basically, let's take the idea of a fixed price and set and forget. So once you have the price that you agree with your counterpart, so if you are a producer, the price is the price that gives you the expected returns, that makes it possible for you to find financing for your project, and basically makes your project feasible at the long term. That's a good price for you. And if you are buying energy, basically that price for the energy makes your industry competitive, gives you predictability, so you can start investing in improvements, because basically you have predictable costs for the energy. So basically you have less risk, so you can start looking at the long term with a lot more uncertain, with a lot more certainty. So, but then some people think if I am selling the energy at this price, then I'm losing all this upside. I'm losing value with this PPA. Well, you are losing value here, but you are gaining a lot of value here. And if you are on the other side, you see the opposite conclusion. So basically, PPAs has to be understood as a win-win situation. It's not that you lose power when prices are higher than the PPA price. You are gaining certainty. You are gaining predictability. You probably are being able to obtain financing that without a PPA would be impossible. So the value of the PPA, it's not the price of the PPA. So if you beat the market, then that's a good PPA. If you don't beat the market, that's a bad PPA. The value on the PPA, it's on the risk that you mitigate. So basically, you change the situation where you don't have predictable incomes, or you don't know what the cost of the energy is going to be for you, where you get basically, you can end up with complete certainty, so mitigating a lot of risk. So basically, once you sign a PPA, you can forget about the market. not completely, obviously, but the idea is that set and forget. If the number is right for you, if you make the numbers and the numbers give you a good outcome, then that's a good PPA, regardless what's the price afterwards compared with the price of the market. So basically, and in order to agree on a price, obviously it has to be a price that works for you, that works for your counterpart, and that uses a good reference on what is going to be the price in the future at the long term for the market that you are signing the PPA. And for that, we provide long-term forecasting. We usually like to show you this long-term forecasting that we made back in October 2010 for the Iberian electricity market prices. And basically, it's an interesting graph because it shows you, one, that on the one side that our forecasts are quite accurate, and on the other hand, on how our methodology works. So basically, we looking at the model analyzes the history, and it may look kind of chaotic but from that, the model extracted the equilibrium price that the market was working at that time and how it projected into the future. So basically, we are projecting an equilibrium price. So we know that there will be times where prices is above, prices is below, but it will always fluctuate around this equilibrium price. So the market will always come back after the COVID crisis, after the gas energy crisis, prices will always come back to that equilibrium prices that we forecasted more than 14 years ago. So this is the idea on how our long-term modeling works. So basically, all this long-term forecasting, long-term analysis is what we offer in our Alea Green division. And as we are talking about PPAs, as I mentioned, we already have a marketplace. Is something that it's a services that was born in a very organic way. So basically, as we have as clients, producers, offtakers, large consumers, basically at some point, all these parties were looking counterparts for the PPAs, and as we have a large base of consumers, of clients from all the roles in the energy sector, basically we are starting providing contacts within our countries. So we kind of standardized it. We are making we made a proper marketplace where we have all the needs from both of the sides. So we find, let's say, the perfect match between producers and off-takers. Also, if you are looking for a project to invest, a project to buy, or if you are a developer or a sponsor that you are trying to sell a project or an asset, we are also providing a marketplace for those kind of interactions, and that's what we put under the umbrella of this Alea Hub division. Also, talking about the energy transition, we made a series of new pieces that you can find in our website. Basically, we identified 15 key vectors for the energy transition. So 15 key things that need to take place or need to advance in order to get to be successful in the energy transition. As I mentioned, there are 15, but focusing on 4 of the main key vectors. One is demand, and the other are renewable. So basically, supply and demand. So both things need to advance more or less in phase in order to be able to have a successful energy transition. So we have to produce a lot of increase the production of renewable energies, and on the other hand, we need the demand to increase in order to decarbonize all the sectors in the economy and to consume all the renewable energy projects. And to make these 2 vectors advance or work properly, we also need other vectors like energy storage in order to manage the production and the demand. So if they are not if they are not happening at the same time, we need to put them in phase, let's say, using energy storage, using green hydrogen as a way to store energy, but also a way to decarbonize those sectors that cannot be directly electrified because it's not possible or it's not efficient. So basically, if not just these 4, but all the 15 vectors advance properly, we will get a successful energy transition where we will have a balance between supply and demand. We will be able to integrate all the renewable energy production, avoiding curtailments, and having more stable prices. Energy storage is one of these key vectors. I would say one of the 4 most important key vectors in these energy transitions, and we are way behind our needs of energy storage right now. So those are the 2030 targets for energy storage for Spain. And in purple, you see the targets for batteries in the national energy and climate plans for Spain. In the last draft, the target for 2030 is of 9 gigawatts. After it was updated from just 2.5 in a couple of years ago on the original publication of these targets. So playing a key role and realizing the need and the importance of batteries and of energy storage. And as I mentioned, the hybridization of renewables and energy storage is going to be a key. It's going to be key for the energy transition and for the energy markets. Also, how we optimize the energy that we store, the energy that we produce, how we inject it into the grid and we sell it into the market. That's going to play a key role. Also for batteries, because for batteries it's going to be very important the revenue stacking. So having income from several sources. One of the main sources is going to be the price arbitrage in daily market. So basically storing energy when prices are low and selling that energy when prices are high. So basically gaining the differences. Participating in the ancillary services is going to be also very important. Batteries are quite good technology for some of the ancillary services. So, but they are services where there's going to be a lot of competition. So probably not a large part of the income. It's going to come from ancillary services and then capacity payment. As we are putting capacity into the system in Spain, in some markets there is already capacity market. In Spain, we are developing. We have already a draft that it's been discussed in the European Commission, a draft about implementing a capacity market that it's going to be key for battery and for energy storage. And we have Alea Storage, this division basically covering all the optimization, predicting what's the income for a long-term projects for batteries or for a hybrid plant. Basically assessing all the forecasting and analysis for energy storage. When talking about information, we have already talked about our online database, where we are covering more and more markets every day. You can find electricity markets, fuels markets, CO2 macroeconomic data, futures markets, as we have seen. So basically, all the energy needed in the energy sector in one place, always updated, ready to be downloaded and analyzed. And talking about information, we also make personalized reports, basically analyzing anything that it's important to you, being it the impact of a new tax, how is the PPA market right now, forecasting of the prices for guarantees of energy, what are the CO2 price? How are the CO2 prices impacting the price in the electricity market? Anything that is related with energy markets, we can provide data, we can provide analysis about that. And talking about data, we also have our webinars like this one that we make monthly in Spanish and in English. We also have our news section that we have a couple of new publications every week talking about how the energy markets are going, any relevant event or aspect of the energy markets that we also analyze. All this information, information intelligence, let's say, section, it's put under the Alea White division. And then we have the more general consulting. So basically, any strategic decision that you need to make, we can support that with data, with analysis. We have made law reports to present in the court, in arbitration, in mediation, basically analyzing, trying to help you in whatever decision you have to make. And that's all. Just let me invite you to our next webinar. It's going to be in September, so we are making holidays in August. It's going to be number 47. We will be looking at how the energy markets have been during the last weeks. We will talk about energy storage, green hydrogen, self-consumption, very interesting, and also services, specifically about services that we can provide to retailers. We will be talking a little bit about retailers, what are their problems, what are their needs, and we can help them. So that's it. Thank you, Alejandro.
Thank you very much, Uriol. Really interesting presentation. I believe we will be sharing the recording of this presentation for the next period a lot. And we will start now the Q&A section of this webinar. Since we are already out of time, we will answer only a couple of questions. I will start with the question about the Alea Energy database platform that we showed. The question is, what about the prices in the Nordics or Eastern Europe? So in the platform, you can already find data for the Nordic markets, Norway, Finland, Sweden, Denmark, some of the Baltics, and also for most Eastern European markets, Romania, Hungary, Bulgaria, Slovakia, among others. But even so, as Oriol mentioned, we are at all times including new markets in the platform, new data for the markets already available. And as we already have the data for all European markets, if there is any new market that you need, we can include it. So Uriol, if you have any questions that you want to answer.
Yes, I think I have time to answer one of the questions. Several questions in the Q&A, very interesting, all of them. I will focus on one that I find especially interesting. So according to a recent study by Acer, Spain ranked third in Europe in terms of curtailments in 2023. Can the situation get worse? How we can reduce curtailments? Yes, if I'm not mistaken, we were behind Germany. That was the one with the highest curtailment, and another one that I remember. In any way, curtailments for 2023 were just about 1.8%. The worst case was Germany, that was 4%, more than 4%, I guess. So 1.8%, it's not too much, I would say, for the whole system. Obviously, in particular nodes, curtailments were higher. But I also remember, because curtailments has to be, or I would say need to be interpreted, need to be correlated with the integration of renewable energy that you have into your system. In Spain, with more than 40% electricity coming from renewable energies, I would say less than 2% of curtailments, it's quite acceptable. I remember a chart by the International Energy Agency where they were plotting that. So Iberian seeing the correlation between curtailments and the percentage of renewable energies into the section, into the energy system, and Spain was one of the lowest ones. So one of the countries with higher percentage of renewable energy into the system and with lower curtailment. So less than 2% of curtailments, I would say it's something that's not putting in danger the viability of renewable energy projects at the long term. Can this get worse? Obviously, it can go. It can get worse. But if everything is going as expected, if we increase the demand, if we increase the energy storage capacity, if we increase the capacity of international exchanges, if we invest in improving the electricity grid, the situation is not expected to get worse. So at the long term, 1%, 2% of curtailments is something that I think it's realistic, and it's not putting in danger the investments of in renewable energy projects right now at the long term.
Thank you, Oriol. And we will answer the remaining questions directly by email. As Oriol mentioned, I invite you to register to the webinar in September. You can see it in the screen. And thank you again, Oriol, for your presentation and the audience for joining. Have a nice day.